What up, world? It's the hungriest YouTube channel in the game, Grow with Kezio, where I use my education and finance to grow generational wealth with you, the audience. Now let's run it. Y'all see the picture, the OG himself, the Oracle of Omaha, Mr. Warren Buffett, the billion-dollar brain. All right. So I found this article today, May 6th, on Market Watch. All right. So what this one is, as the headline says, is talking about is the 5 takeaways from the 2024 Berkshire Hathaway Annual Shareholders Meeting. All right. This is in the stock market industry. For those that don't know, and in investment finance, this is one of the biggest tickets, one of the biggest shows in town. All right. So let's just go through the article. All right. Quick pieces that I think are important for anyone who's investing and trying to keep up and know what to do with their money long term. All right. Berkshire Hathaway held its 2024 annual shareholders meeting this past Saturday, the first without longtime vice chairman Charlie Munger, rest in peace. Berkshire CEO Warren Buffett held court in front of around 18,000 investors in attendance in Omaha, Nebraska, where he was joined by Vice Chairman Greg Abel, who runs the non-insurance businesses, and Ajit Jain, who runs the insurance businesses, to give an update on the company's business and opine on questions ranging from his relationship with Charlie Munger to how Berkshire might deploy its massive $182 billion pile of cash. All right, so year to date so far, Berkshire stock is up about 12% compared to the overall market, based on the benchmark S&P 500 being up 7.5%. So they're beating the market, which is what they're supposed to do when they're managing people's money and charging them for it. So here's a few takeaways. All right. So the number one thing, Berkshire continued to trim its stake in Apple. All right. So this first factor, let's see. All right. So this first factor actually shook up the market this past weekend when the news dropped. So it's very interesting. All right. And here it is. Berkshire continued to trim its stake in Apple. And Apple was the biggest company on the planet for so many years, up until I'd say the end of last year or maybe the beginning of this year. Now Microsoft is, but still that's huge that Berkshire Hathaway is trimming, some of their shares. So the big news of the morning was that Berkshire continued to trim its stake in Apple. Continued, which means they had been unloading their shares over time. Recently, the conglomerate reduced its holdings by 13%, down to 790 million shares. According to its earnings report, Berkshire had held 905 million shares of the iPhone maker at year end 2023. So over the past 4 months, they've sold 110 million shares. 115 million shares, right? So they still own most of them, but for this man who's a investing genius, for him to start selling double-digit percentage amounts of his shares in basically the biggest company of our generation, he must see something on the horizon that makes him think, oh, now's the time to start backing away. That's how I took this news. So that's important if you're an investor in the market, if you're an investor in Berkshire Hathaway, and if you're an investor, more importantly, in Apple, because it's been a safe bet for so many years, for over a decade. But if he's slowly selling some of his shares, maybe he thinks that it's overvalued. Maybe he thinks that it hit a top. You know, maybe he feels like there's some pain coming down the road. So might as well take the shares now, take the gains now, while the company is basically it's almost at 3 trillion, and see what happens. Take that cash, have cash to deploy later on when maybe he sees a market correction coming, 10%, 10%, or maybe a 20% bear market. I don't know, but if 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 this man is backing out and selling some of his Apple shares, then that's a bad omen for what he sees in the stock market overall, in the near future. Maybe because it's an election year, maybe he feels like, you know, this fall is going to be rough. But yeah, let's go on. Let's keep moving. Let's keep it going. Let's keep it going. All right. So yeah, pay close attention to this next move that Warren and the company made. Okay. In this next part for those who are investing in the company and those who are investing in companies that Berkshire invest in. If you're mirroring their market, I mean their portfolio. Sorry. All right. So Buffett said Berkshire has dumped Paramount completely, and anyone who knows Warren Buffett, you know that when they buy a company that they plan on owning forever. So for them to not only sell some shares like they sold of Apple, but they completely dumped the whole company. They sold all their shares of this company called Paramount, but disclosed little about the investments. All right, so the biggest shoot, but yeah, even the best investor of all time, even he can make mistakes. But this article kind of shows, or this little blurb or paragraph will show you why, and it'll teach you on what you should look for when you're investing, in my opinion. The biggest revelation during the question and answer session was that Berkshire has sold its entire stake in Paramount Global. Berkshire lost quite a bit of money on the stock, said Buffett. Paramount has been hit hard by missed earnings estimates, a CEO departure, and merger talks. All right, so that's huge. You gotta look at this. For one, the fact that they had missed earnings estimates means multiple. So that means as they were missing earnings each quarter, Warren Buffett and Berkshire Hathaway they continued to hold on to the company. So they didn't make any knee jerk reactions. So that's one clue on how you should be investing. That's what I take from that part is if they miss one or two earnings estimates, over a 3 6 month period, that doesn't mean you should bail right away. He gave them enough chances to where they continue to miss earnings. But he wouldn't do that unless there's been times in the past where maybe they missed the first earnings and then they bounce back after that, or they missed two earnings and then they bounce back after that. Like a great, a talented franchise basketball player could have a bad 3 game stretch. That doesn't mean you trade them though. You don't trade the player because they had a bad month of basketball or a bad week of basketball, right? You overall you stick with it because they're probably gonna have more great nights than bad nights. Okay, two, a CEO departure. When the CEO leaves the company, whether it's voluntarily or involuntarily, that is a bad omen for the company, for leadership, for direction of the company. When the CEO leaves, that's he's the CEO. He or she is supposed to be one of the most stable parts of the company. So that's something you should look for when you're investing. Pay attention to management. Clearly, the CEO and the board were not on the same page. So now you got infighting, or you got, you know, the executives want to go in different directions, well, then the company is screwed at that point. Then after that, you have merger talks. So usually merger means someone is buying someone. It's not a merger. It's not an equal 50-50 partnership. Somebody is getting bought by somebody. So Paramount was probably trying to sell to themselves to another company. Maybe the CEO didn't want to, and then they booted his ass out of there, right? So merger talks. It doesn't look like if the merger talks meant Paramount was going to buy another company, I don't think Warren Buffett will be leaving. Okay, so Berkshire was one of the largest Paramount shareholders in December of 2023 with a stake of 63 million shares. That was nearly 10% of the whole company. So when they go in, hard and fast, boss. So they wanted to they really believed in this company. And clearly things didn't work out. And Warren Buffett and Berkshire Hathaway, their company, they have a lot of money. They can get a lot of information that the average investor like us can't get. So I'm sure he did his due diligence on the company, looked through all the numbers, and everything looked good. And then he still ended up being wrong about them. So you never know. Sometimes some investments aren't gonna work out. Um, and Buffett also rebuffed speculation that Ted Weckler, Weschler, or Todd Combs, who together run about 10% of Berkshire Hathaway's equity portfolio, had purchased the Paramount stake, calling it 100% my decision. Right, so he's taking the blame for buying that company. All right, so that was number two. Okay, let's see what we have. All right, so number three. Number three is part of their number two, but for me, it was the third important factor of the five factors, five takeaways from this. But for me, it's five factors, right? Because um, um, this is what I call my show, like fun factors or this is what I call this show on my channel. I call it fun factors, by the way. Maybe I didn't say that in the beginning. Either way, number three, overall, um, Buffett acknowledged that he was having difficulty finding suitable places to deploy the company's massive cash pile, especially since the company can can earn more than 5% just sitting in ultra safe treasury bills. So, for investors, pay attention to that. Of course, new and intermediate investors, advanced investors already know this, right? So, this isn't advice for them. Um, when you don't see stocks that you feel are a bargain, or Buffett, he'll rather stay in cash than buy than invest his money into a stock market that he feels is overbought or that he feels is overpriced. So he's looking around. He doesn't see anything worth buying. So and he knows more than and knows better than most of us investors. So at that point, I look at it like, why would we be putting our money into the market if the greatest investor of all time isn't putting his money into the market? And then, of course, his alternative is buying treasury bills, right? Which is the next best thing to cash. He's not gonna leave his money in cash in the bank because inflation is gonna eat that up, right? So inflation is at what, 3.7%, 3.5%, something like that, and then buying treasury bills, which any of us can do. We can go on the Treasury website, and buy treasury bills, right? And then they can expire in 3 weeks. I think they expire on the Thursday of every week, or the last Thursday of every month, or just every Thursday. There's like a rolling every Thursday. They expire, from what I remember when I used to work at a wealth management firm. And he's saying, hey, I'd rather just put the money in something safe, like U.S. Treasury bills that are backed by the full faith in something of the U.S. government, um, full faith in credit, I think, something like that. But and at 5%, so your money is shrinking by 3.5% annually. And so he found something. He'd rather put his money in treasuries where his money is growing by 5% annually. So net, that's what 1.5%, right? Um, if inflation's at 3.5%. But if you got your money in the bank, if you got your money in a CD account, and it's the interest they're paying you is less than 3.5%, then you are losing money. You know the money's not safe there, right? So that's something to think about if you're new to investing, especially if you have a lot of money too. Berkshire ended the first quarter with more than $182 billion in cash and treasury bills. And Buffett, during his presentation, said he could see that growing to 200 billion by the end of this quarter, which we're in quarter two. We're in the second month of quarter two. Okay, so he said it isn't like I've got a hunger strike or something like that going on. It's just that things aren't attractive. Things aren't attractive is his way of saying, because he's a value investor, is his way of saying everything is overpriced. So if you idiots keep buying into this damn market and running it up, running the numbers up, like you're gonna regret it. You're in for a world of hurt. There's nothing. These companies are um, they're overpriced. That's what he's saying. All right. Um, and then this was a haymaker when he hit like you know pay attention to these words that are coming up next, because this is um this is important for people who are invested in the company in Berkshire. All right. Buffett is squarely focused on succession. That's the number 4 factor from this meeting. Munger's death naturally brought even more attention to Buffett's plan for succession. At the age of 93, Buffett acknowledged that he might not have many more years atop the company himself, though he said he's feeling well so far, knock on wood. Um, Buffett's likely successor is Greg Abel, who is 61 years old, and Buffett acknowledged that at least some of the duties he used to perform, like regularly talking to the executives in charge of the company's portfolio businesses, have already passed to Abel. And Jane, who's 72, who heads insurance operations. All right, that was the 4th factor. And then the 5th factor, final factor, it looks like Buffett thinks that humanity might one day regret AI, which is something that Elon Musk has said and some other people. Everyone but the the Chat GPT guy, from OpenAI. He wants AI to be like your assistant, like a human, and can do things that you need done before you even tell them to do it. Okay, so as what they're saying, so Munger's death, right? Sorry, wrong part. So one investor asked for Buffett's thoughts on artificial intelligence, which prompted him to recount a recent experience he had viewing AI. He had viewing an AI created video for himself that he said would have been good enough to fool his family. That's scary. While he said there was no doubt, no doubt that good things come from AI, humanity might one day regret letting the genie out of the bottle. That's scary that he says that. Scamming has always been part of the American scene, but this would make those interested in investing in scamming. It's going to be the growth industry of all time. All right. So I guess he meant the biggest growth industry of all time when it comes to AI scamming. So yeah, that was a fifth factor. It was a good event, and you can go on YouTube, go on a lot of different sites, and they'll show clips from it. So very important if you're investing to pay attention to what Warren Buffett is saying and what his company Berkshire Hathaway is doing in the market, because it'll kind of give you an insight on what to do with your money based on if the market is overbought. You can go and look up the Buffett indicator. That's very important. Something I like to do. But yeah, stay tuned. For my next episode of fundamental factors, fun factors for short, where I go over a few factors in an article that I feel like are important. Just to kind of summarize it for you, and help you make help you think more clearly about what moves to make in the market with your money. All right, but this is not financial advice. I'm not a financial advisor. Don't listen to anything I say, especially if I'm just telling you what I'm doing with my money, with my investing. All right, so like this clip and subscribe to my channel. Then click the bell notifications if you want to join me on this wealth building journey. All right, come on and grow with Kezio. I'm out. Peace.